Okay, class. Good day once again. Welcome again sa ating course on accounting for business combination. Yeah, right. Yeah, thank you. Okay, thank you guys. So previously we have discussed yung approaches kung paano gawin yung ating uh, consolidation or consolidated balance sheet as at the acquisition date, right? Right. Yan. So we have um, two approaches, which is the direct approach and the worksheet approach. Okay. So for today, we will be um, having a comprehensive illustration on the consolidated balance sheet as at the sorry the date of acquisition. Right. So, for our listeners na nagpo-follow sa kanilang mga libro, we are already on page, what's this? Yun, tama. We are, wala siya. We are on page 141. Yes. Okay. Again, welcome. And credits again to Sir Antonio Dayag for this very wonderful presentation. And also, I would like to congratulate in advance our CPA licensure examination takers. Welcome to the profession in advance. Yeah. So, God bless to all of you. Okay? See you sa finish line. Okay? Ayan. Right. So let's continue sa ating comprehensive illustration. So consolidation procedures are affected by the parent company's ownership percentage and by the existence of a differential between the consideration transferred for the investment and its underlying book value. Accordingly, different illustrations are given for the following cases. So meron tayong consolidation of wholly owned subsidiaries, then consolidation of partially owned subsidiaries, right? So consolidated balance sheet, the use of work papers for wholly owned subsidiary. So assets and liabilities are summed in their entirety regardless of whether the parent owns 100% or a smaller controlling interest. So in the latter case, the non-controlling interests are reflected as a component of owner's equity. So kapag hindi siya 100% owned, so meron tayong non-controlling interest which will be shown as a component of our owner's equity. Right? Right. So this interest may be referred to as either the non-controlling interest in the net assets or as the non-controlling interest in equity. These terms are identical. In the textbook, it is abbreviated as non-controlling NCI. Okay, abbreviate. Right. Right. So in as much as the parent and its subsidiaries are being treated as a single entity, eliminations must be made to cancel the effects of transactions among them. So intercompany receivables and payables. Likewise, any intercompany profits in assets arising from subsequent transactions must be eliminated because an entity cannot profit on transactions with itself. So, ayun. So, this is under the rulings on transfer pricing. I think I'm not sure. Okay, so I think we will have it covered in these next chapters. Anyway, so or correct me if I'm mistaken. Anyway, so a work paper is frequently used to summarize the effects of the various additions, eliminations, and so forth. So previously uh, we have discussed the way of how to use the direct approach versus the work papers approach. So we will be using the work paper approach for this um, illustration. Okay. So as for the intercompany accounts to be eliminated sa ating parents accounts, so this elimination entries, okay, will only be done sa ating work papers. So these are work papers entries only. Okay? So sa investment in subsidiary, sa parent account, it will be uh, uh, it will be against the book value of shareholders equity and uh, over or under valuation of assets and liabilities dun sa subsidiaries account. Then, intercompany receivable or payable, syempre, this is also against the intercompany payable or receivable ng subsidiary. Okay? Another one, advances to subsidiary or advances from, syempre, it will also be against the advances from parent or advances to parent. Okay? Interest income or interest expense from uh, subsidiary or to subsidiary, it will also be against interest expense or interest income of the subsidiary. Then dividend income declared versus the dividends declared or dividends income. Okay, so this is actually the the pertaining account of the related account. Kunyari, yung sa dividend income, syempre may declared dividend income yung parent, magkakaroon ng declared dividend expense naman declared dividends naman sa subsidiary. So, yung dividend payable ni subsidiary, it will be a dividend receivable ni parent. Mga ganong type. Right, right? Right. Yeah. Then, management fees received from subsidiary and management fees paid to parent. So, these are some of the intercompany accounts to be eliminated in our work paper entry. Right, right? Yeah. Thank you, thank you. So, moving along. So, for our illustration, so illustration 2.6, ito yung sinasabi ko kanina na nasa page 141 ng ating book. Right, right? So, peer company acquires all of Sky Company's outstanding stock on January 2014 or 2024 whatsoever by paying 340,000 in cash and immediately prepares a consolidated balance sheet. The separate balance sheet of the two companies immediately prepared before the consolidation with acquirees fair value were presented as follows. So ito yung kanilang balance sheet. Ito yung sa parent or the acquirer, and this is for the subsidiary or the acquiree. Okay? Yeah. So using the uh, work paper approach, prior to that, um, let's compute for we have discussed previously the what you call this, the steps on the consolidation, right? So if you can recall, it is abbreviated as um, RMIR, right? So RMIR stands for uh, Pogi Caesar. Right, right. Joke lang. Ayan. So RMIR stands for Reliable Measurement. Then um, the elimination step, and the amortization and recognition. So our first step is reliable measurement. So this will be uh, these are covered in our chapter 1, right? So yung computation ng ating goodwill, yung comparison ng consideration transferred versus the book value and or the excess over the fair value over the book value, the difference would be our goodwill or gain on bargain purchase. Right, right? Right. Yeah. So thank you guys. Yan, yan. So the resulting ownership situation can be viewed in the schedule of determination and allocation of excess. So the schedule is used to compare the company fair value with the recorded book value of the subsidiary. It also schedules the adjustment made to subsidiary accounts in the consolidated worksheet process. The schedule below is for a 100% interest, so non-controlling interest is not expected to arise. Right, right? Yan. So, yung dun sa balance sheet natin kanina, okay? So, ito yung consideration transferred. Okay? Then, ito yung mga fair value. Right? Right. So, yung ating consideration transferred na 340,000 compared dun sa book value of uh, equity ng ating subsidiary. Okay? So, ito siya. Uh, equity. So, from here, yung common stock niya. Oh no. Yan. Common stock at book value. So, 200,000 plus 20,000 plus 80,000. Yan. So, ang book value ng equity would be 300,000. Then, the allocated excess would be 40,000. So, for this 40,000, we will allocate um, a part of this dun sa ating over or under valuation of assets and liabilities. So, paano natin makukuha ito? Okay? So, meron tayong prepared schedule dito, for example. Pero, this must be uh, prepared prior to doing the determination. Okay? So, yung book value ng ating asset and liabilities as compared sa fair value ng ating assets and liabilities. Okay? So, these are the over-under valuations. So, the net amount will be 30,000. Okay? So, difference ng book value ng inventory is a increase of 15,000. The land has increased also for 60,000. Nag-decrease yung ating building and equipment by 10,000. And nag-increase yung ating bonds payable by 35,000. So yung net effect natin, net over under valuation would be 30,000. So iles natin yun dun sa allocated excess natin, we will have a positive excess or goodwill of 10,000. So that is our first step. Right, right? Right. Next. So, peer company records the stock acquisition on its books with the following entries. Okay, debit, investment, credit, cash. So, eliminating entries are made to cancel the effects of intercompany. Sorry, what happened? Yan. So, eliminating entries are made to cancel the effects of intercompany transactions and are made on the work paper only. So, please take note of this. Okay? So, when doing the consolidation, um, yung ating eliminating entries are done only sa ating work paper. So, on the date of acquisition, the eliminating entries consist of two. The first entry is to eliminates the book value of the stockholders' equity account of the subsidiary with its equivalent amount against the peers account. So, debit dun sa subsidiary natin kasi meron pa tayong uh, book value ng ating, tama? Book value ng ating equity. So, may eliminate yan. Credit yung investment in SkyGo. So, SkyCo pala, sorry. Yan. So, kung papapansin natin, yung investment account natin is 340,000, right? So, na-credit na natin yung 300,000. So, we still have a remaining of 40,000 sa ating investment account. Right, right? Right. But for our equity account na ay dinebit natin ng 300,000, so I think we have already eliminated yung ating book value ng equity. Yan. So, eliminated na siya. So, zero out na yung ating equity balance. Right, right? Right. Then, another entry is the balance in the investment account will be attributable to allocated excess. Okay? So, yung fair value natin, yung changes sa fair value, okay? Hanggang sa bonds. Ito lang. Okay? Yung land, good, ay hindi, pa sa inventory, land, building equipment, and premium ay bonds payable. Okay? So, yun yung i-eliminate nating changes sa fair value. Oh, okay? So, that will total to a net amount of 30,000. Okay? So, meron pang may iwang 10,000. So, yung 10,000 dito will go sa ating goodwill account. Okay? So, kung mapapansin nyo, ayan. So, kung mapapansin nyo, sa ating elimination entry, right? Ayan. So, mare-recognize natin yung increase ng ating assets and increase ng ating liabilities. But, we will be eliminating the uh, investment account. Okay? So, we will allocate the investment account dun sa increase or decrease na ating fair value and sa ating goodwill. Right? Kaya pa yan, guys. Kapit lang. Yan. Okay? So, the two entries above may be easily combined into a single compound entry. So, you can do that. However, for illustration and clarity purposes, in this book, so separate entries will be made. So, we can do consolidated, one compound entry. So, instead na hihatiin natin yung 340 na investment account, we can sum it up to 340 investment account. Okay? Pero kung i-check ko yan, i-check ko yan, syempre 1 point lang yun. Just. Pero ganun na lang. Be careful na lang kung ako na rin nagpa-quiz ako or sa inyong examination. Always follow the instruction given. But for the purpose of for the record, kung silent dito lang sa subject natin ha, sa course natin. If the problem is silent, please do not compound your entry. Okay? Do the two eliminating entries. Okay? Yan. So kapag silent, hindi siya compound. Right, right? Okay. Next. So, ito na yung ating worksheet. So, the separate financial statements of the two companies, the eliminating entries, and the consolidated totals for the balance sheet of on January 2014, 2024 whatsoever are shown in figure 2-1. So, ito yung worksheet natin for consolidated balance sheet. Okay? Right, right? So, ito yung balance sheet ni parent. Ito yung balance sheet ni subsidiary. So, dun sa first entry natin, 'di ba? Yung i-debit natin yung book value ng equity ni subsidiary. Okay? So, kung makikita nyo, eliminated na yung ating equity. Then, credit yung ating investment account. Okay? Yan. Then, sa second entry, to recognize yung increase ng I mean yung to recognize the movement of our assets and liabilities due to uh, due to the fair value valuation. Okay? So kung titignan nyo, yung yung inventory amount natin will be valued at fair value sa ating consolidated FS or consolidated balance sheet. Okay? So 100,000 plus the fair value nung inventory, which is 75,000. Our consolidated amount for inventory is 175,000. So we will so ating entry number 2, we will just record the movement as per the fair value. Okay? So sa land, we have an increase of 60,000. Sa buildings, we have decrease of 10,000. And sa ating liability, we have an increase of 35,000. Okay? And also, we have an increase in our total asset of 10,000, which represents our goodwill. So sa ating consolidated FS or consolidated balance sheet, we will recognize the amount of goodwill amounting to 10,000, right? Right, right. Yan. Then, kung makikita nyo, sorry naman. Ayan. So, kung makikita nyo, yung ating investment account is already zeroed out. Okay? Yan. Zeroed na siya. Yan. Okay? Then, dun sa equity account naman, okay, kung makikita nyo yung equity amount ni subsidiary, totally eliminated na siya. Okay, so ang may iwan na equity amount will be the amounts as per the parents book. Right, right, right? Right. Kasama pala to. Yeah. Naku na. Yan. So, number 1, na-discuss na natin yan. So, our consolidated figures will be a total asset of 1,335,000. Yeah. Okay? Klaro yan? Klaro? Yan. So, yan yung use ng ating worksheet approach. Okay? So, next will be, wait lang. Wait lang guys ha. Yeah, malayo-layo pa tayo sa katotohanan. Anyway, okay. So, kung gagawin na natin yung ating balance sheet, syempre, ito na siya. Yung total asset natin is 1,335,000. Okay? So, take note na this is under 100% ownership. Okay, so wholly owned siya ng parent. Right, right? So, the subsidiary has a recorded goodwill at acquisition date from the perspective of its new parent. The goodwill is not considered to be an identifiable asset at the time of the business combination. The adjusted allocated excess or acquisition differential is calculated as if the goodwill has been written off by the subsidiary, even though the fact I sorry even though in fact this is not the case. So the adjusted allocated excess or the acquisition differential is allocated first to the fair value excess. Tama. Right, right? Right, right, right? Right. Ayan. So, how about if we have a consolidation of balance sheet with the use of the work figures approach if it is partially owned. Hmm, partially owned naman siya. Wait lang. What about the direct approach? Well, anyway, yung direct approach, uh, you will see it sa inyong, wait lang guys. Ay, wala pa pala siya. Okay. So, ayan, tama pala, tama. So, partially owned muna tayo using the work papers approach. Right, right? Right. So, let's take illustration number 2-7. No, yes, right. Yeah. Wait lang guys ah. Ayan. So, yung ating illustration to the 7 is in page 144. Okay? So, peer company acquires 80%. So, 80% lang to ha ng Sky Company. So, yung ating subsidiary is Sky Company paying 300,000 in cash and immediately prepares consolidated balance sheet. Peer also pays 12,000 in direct costs. So, we have another item which is indirect costs to accomplish the purchase. The separate balance sheet of the two companies immediately prepared before the consolidation with acquirees fair value represent as follows. Okay? So ito yung balance sheet ni parent, then ito yung balance sheet ni subsidiary prior to the acquisition. Okay? So ito yung fair value naman ng ating subsidiary. So partial goodwill approach tayo. So, schedule of determination, okay? Ito yung ating consideration transferred which is 300,000. Yung book value ng ating equity at 80%, okay? So, yung kung titignan natin, yung book value ng ating equity is same as kanina, so 300,000, right? Times 80%, magkano yan? Magkano yan guys? 3 100,000 times 80%. Oh, tama. 240,000. So that would be the book value. So we have an allocated excess of 60,000. Right, right? Right. So um, we have the difference between the fair value and the book value at 80%, ha? Okay? So we have 24,000. Magkano yung excess natin kanina? 30,000, right? Yeah, so we will have the same value, yung 15,000, 60,000, 10,000, 35,000 multiplied by 80%, that will be a net amount of 24,000. So ang ating partial goodwill is 36,000 using the partial goodwill approach. Okay? So ito yung over undervaluation natin, yung difference ng goodwill over the fair value. Yan, di ba? 30,000 times 80% is 24,000. Okay, so the buildings and equipment will be further analyzed for consolidation purposes as follows. Ayan. So yung um, book value is 300,000, accumulated depreciation is 300,000. So yung net book value natin is 300,000 compared sa ating fair value of 290,000. Our decrease or increase sa ating um, fair value is negative 10,000. Ayun siya. Right, right, right? Gets pa guys? Yeah. Okay, next. So, peer company records the stock acquisition on its book. So, yung recognition natin ng acquisition. So, we have debit investment, which is 300,000 credit cash. Then, for our payment of the indirect costs, debit, retained earnings, 12,000 and credit cash for 12,000. So meron tayong decrease sa ating retained earnings and also a decrease in our cash account. Okay? So this is an adjustment sa ating balance sheet for the parent's book. Okay? So please take note of that. So, let's do the second step, which is the elimination. First entry, to eliminate yung ating um, equity ng ating subsidiary over the investment account. Okay? So, our book value ng ating equity is 300,000. Okay? Right, right? Yan. Time I credit the percentage, okay, ng ating excuse me po. Yan, percentage ng ating parent, which is 240,000. Ito yung percentage natin sa book value. Okay? So, kung matatandaan nyo, yung entry natin dyan kanina is the total amount. Di ba? Debit, yung equity na 300,000, credit investment of 300,000. But for this one, dahil nga partially owned lang siya, we only credited our portion sa ating total equity, which is 240,000. Right? Right. Then our second step, yung entry pala natin sa ating non-controlling interest, which is 60,000. Okay? So, we have another account, okay, na non-controlling interest. Right? Yan. Then, next is um, the balance of investment. Ayan. So, yung ang tawag dito? Yung difference ng ating fair value. Okay? So, increase in inventory. Tapos, yung accumulated depreciation. Then, our increase in building. Then, yung ating increase in land, then increase in goodwill, which is 36,000. Ito yung na-compute natin na partial goodwill. Tapos, credit yung ating increase in liability of 35,000. Then, our uh, yung portion, okay, yung portion ng ating NCI dun sa over-under ng ating fair value, over-under valuation na 6,000. Then, the remaining amount of 60,000 dun sa ating investment account. Okay? Nagets nyo ba? Yeah, right, right. So, kung titignan natin yung ating worksheet, okay? So, ito yung ano natin kanina, yung balance sheet natin, right? Then, ito yung sa subsidiary. So, first entry, yung ating yung i-eliminate natin yung equity. Okay? So, as you can see, meron tayong bagong account na non-controlling interest of 60,000. Okay? Then, dun sa ating second entry, yung sa valuation effect, okay, meron ding portion yung ating non-controlling interest. So, kung titingnan natin yung consolidated amount, ang ating total asset is 1,789,000. Then, yung ating total goodwill is 36,000. Right, right? Right. Then, ito yung sinasabi ko kanina, yung ating retained earnings. Okay? Ayan. So, yung ating retained earnings kanina is meron siyang nasaan na siya? Ayan. So, 350,000 less 300,000 less 12,000. Then, we have 38. Wait lang guys. Saan ba ako? Wait lang. Nalito si sir. Ayan, yung retained earnings natin kanina, sorry, is 250,000, right? Then, dineduct natin yung indirect cost na 12,000. So, dun sa ating consolidation, ayan, yung ating retained earnings is, tama, right? Right? Tama, right? Ayan, ang ating consolidation, we have 238,000 as retained earnings. Okay? Then, yung ating cash kanina, yan, yung cash kanina is we go inside. 38,000. Hindi 38,000. Yan. Ayan, yung cash is 350,000. Diba? Then, dinadak natin yung 300,000 for the payment ng investment less yung 12,000. So, ang natitirang cash natin dun sa ating parent account. Yay! Right! Yes, thank you guys. Yan, so ang natitirang cash natin sa ating parent account is 38,000. So 350,000 yung prior to acquisition, less 300,000 dun sa payment ng consideration, then less 12,000 dun sa payment ng indirect cost. Yun yung naiwang uh, cash amount. Right, right? Right. So, ayun nga, ang ating total asset is 1,798,000. Ayan. So, that's how you compute kapag partially owned yung ating subsidiary. Okay? Ayan. So, ito na yung the amounts that will appear on the consolidated balance sheet are shown in the final column figure of 2-3. Nasaan na yung 2-3? Di ba? Ang total asset natin dito sa worksheet is 1 million. Okay. Ay, mali kasi yung di ba? Mali. Sorry, sir. Sorry, Sir Dayag. Yeah. Di ba? Nasa baba kasi yung ating accumulated depreciation. So, mali yung ating total asset. So, kung titingnan natin, 1,798,000 less yung ating 400,000 na accumulated depreciation, our total asset is 1,398,000. So, tama pa rin tayo. Right? So, mali lang yung worksheet natin. Okay? Mali yung worksheet. Okay? Yeah. So, I think we will have another discussion kapag bargain purchase naman. Okay? So, for this recording, yan, thank you. If you have any questions, clarifications, and reactions, please don't hesitate to message me through our Facebook Messenger group chat or our LMS group chat. Right, right? Ayan. Ayan, I will post another video again for another illustration sa bargain purchase naman. Okay, so, ayun, thank you guys and have a good day.